RBI has the authority to control over all the banking system in India as well as the monetary system. They have the power to control the monetary system. Reserve Bank of India was established following the Reserve Bank of India Act 1934. Keeping reserve, they cannot supply whole money, they cannot supply full money to the economy. So they need to reserve some money in order to meet uncertain risk. Hello everyone, a warm welcome to one and all to the first session on Unit 2, that is Reserve Bank of India. I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. So in today's session, let us start with the Unit 2, that is Reserve Bank of India. So in today's session, let us discuss with the introduction, constitution, nationalization, organization structure and main functions of RBI. So you all know RBI, Reserve Bank of India. The Central Bank of India is the main authority. The Central Bank of India holds the authority, responsibility to control the monetary system in India. So under Unit 2, we are going to study in detail about the Reserve Bank of India. So first one, introduction. So the Reserve Bank of India, chiefly known as RBI, Reserve Bank of India, that is Central Bank of India, is known as RBI. It's an Indian central bank regulatory body. It's a regulatory body which holds the responsibility for regulation of the Indian banking system. RBI has the authority to control over all the banking system in India as well as the monetary system. They have the power to control the monetary system. Along with that, they have the sole power to print and issue the notes in the Indian economy. It is under the ownership of Ministry of Finance, Government of India. This RBI comes under the ownership of Ministry of Finance, Government of India. It is responsible for issue and supply of Indian rupees. They have the sole power to issue and supply the Indian rupees and also manage the country's main payment system and work to promote its economic development. So in order to maintain economic stability and economic development, this RBI holds the authority and responsibility. So moving further, RBI Constitution. Reserve Bank of India was established following the Reserve Bank of India Act 1934. So based on this Reserve Bank of India Act 1934, this RBI is established. So though privately owned initially, this RBI, Reserve Bank of India, Central Bank, initially it started as a private bank. So it started as a private bank, then it is converted, it is nationalized and it is converted as a Central Bank of India, that is RBI. It was nationalized in the year 1949. The Reserve Bank of Indian Act 1934. Since they fully owned by the Ministry of Finance, Government of India. Now it is fully owned by the Government of India. Initially it started as a private bank, then it is nationalized in the year 1949 and it is fully owned by the Government of India right now. The Reserve Bank of India was conceptualized in accordance with the guidelines presented by Dr. Ambedkar to the Hilton-Young Commission. Hilton-Young Commission, also known as Loyal Commission of India. So this Reserve Bank of India was conceptualized in accordance with the guidelines presented by Dr. Ambedkar to the Hilton-Young Commission. So based on his book, The Problems of Rupee, Its Origin and Solution. So based on his book and based on his guidelines, this RBI is going to conceptualize and is going to work according to this guidelines. Moving further, in 1926, the Hilton-Young Commission recommended the setting up of the Reserve Bank of India. In the year 1926, Hilton-Young Commission, he recommended to set up Reserve Bank of India in order to maintain stability, in order to maintain economic stability and in order to control monetary system, banking system in India. At the time of establishment, the authorized capital of Reserve Bank of India was 5 crore rupees. So initially it started as a private bank with the minimum capital with the capital of rupees 5 crore rupees. So at that time the government share is only 20 to 22 lakhs. So when it is established as a private company, the government share was only 20 to 22 lakhs. So after that, government has paid the money for shareholders based on the market price. So after that, it is fully converted and fully owned by the government of India. So moving further, preamble. The preamble of Reserve Bank of India describes the basic functions of Reserve Bank. So this preamble describes the main functions of RBI. So that is to regulate the issue of banking notes and keeping of reserves with the view to securing monetary stability in India. That means to regulate issue of banking notes. So they have a sole power to issue and to supply the money to the Indian economy. Then keeping reserve, they cannot supply whole money, they cannot supply full money to the economy. So they need to reserve some money in order to meet uncertain risk. So you need to keep some reserve with a view to securing monetary stability. In order to maintain a stability, in order to maintain monetary stability, you need to keep some reserve, and generally to operate the currency and credit system of country to its advantage. That means they have a power to control money supply in India. So in order to maintain with the inflation, so they have a power to maintain the money supply in Indian economy. Then to have a modern monetary policy framework to meet the challenge of an increasingly complex economy. In order to meet the challenge of increasingly complex economy, to maintain the price stability while keeping in mind objective of the growth. So in order to improve, in order to develop Indian economy, keeping in mind growth of Indian economy as well as price stability, they regulate, they control the banking system in India. So this is the preamble of RBI. Moving further, nationalization. The Reserve Bank of India was established on April 1st, 1935. So RBI was established in the year 1935 in accordance with the provisions of Reserve Bank of India Act 1934. So in accordance with the Reserve Bank of India 1934 Act, this RBI was established. So initially it is established as a private bank and now it is fully owned by the government of India. The central office of Reserve Bank of India was initially established in Kolkata. So first it is established in Kolkata, but then it was permanently moved to Mumbai in the year 1937. In the year 1935, it is established in Kolkata. Then it is permanently moved to Mumbai in the year 1937. The central office is where governor sits and where policies are formulated. So how we consider the central office? The central office is where the governor sits and where the policies are formulated. So that is central office for the RBI. Moving further, organization restructuring. So organization restructuring of RBI. The Reserve Bank affairs are governed by Central Board of Directors. So this RBI is controlled, or it is governed by Central Board of Directors. So how we are going to select the Central Board of Directors and number of directors? So all this we are going to study under the organization restructuring. The board is appointed by the Government of India in keeping with the Reserve Bank of India Act. So in accordance with the Reserve Bank of Indian Act, Government of India is going to appoint this directors for the RBI. Appointed or nominated for the period of 4 years. So this directors, all the members of RBI is appointed for the 4 years, for the period of 4 years. So they appoint the director based on the Reserve Bank of Indian Act. In accordance with this act, Government of India is going to appoint the directors for RBI. Next, under the organizational restructuring, first is official directors, classified as official directors and non-official directors. So first one is official directors. There we have a full-time governor and not more than 4 deputy governor. That means 1 governor and 4 deputy governor. So next one, non-official directors. These 5 members are the official directors and this nominated by government. So this non-official directors are nominated by the government. 10 directors from various fields and 2 government officials. 10 directors from various field. Then again 2 government officials. 2 government officials. So these are the non-official directors. So again others 4 directors, each from 4 local boards. So each 4 directors from 4 local boards. So total we have this much of directors. So it can be explained through diagram. So central board of directors. First one is a governor, deputy governor, executive director, then principal chief general manager, again general manager, deputy general manager, assistant general manager, manager, assistant manager and support staff. This is the organizational structure of RBI, Central Board of Directors. So we have this structure in order to control, in order to govern Indian economy. So they make a decision. So this governor, they make a decision in accordance with the Reserve Bank of Indian Act. So they consider all the members, all the directors' opinion in order to make decision. So with this structure, they make decision, policies, regulation in order to control, in order to print and in order to supply the money to the economy. So this is the organization structure of RBI. Moving further, main functions of RBI. So this we have studied in the first unit. Again, we are going to study the same topic under Reserve Bank of India. So under that, first one is a currency regulator or bank of issue. That means RBI is a currency regulator. That means they are going to print, they are going to supply the notes to the economy. They are the issuer of notes. So they issue Indian rupees to the Indian economy. So in order to maintain the price stability, in order to control monetary system, they print and they supply the notes and they keep some reserve in order to maintain monetary security, in order to maintain the monetary stability. They keep some money as a reserve in order to maintain monetary stability. Next one is a bank to the government. So here, normal individual or normal people, we visit bank in order to deposit our money and in order to take loan. So we visit general banks. Government take Reserve Bank of India as a bank for their deposits and to get some loan. So they deposit the money in RBI and they take loan from the RBI. Here RBI act as a bank. They undertake primary function like depositing and withdrawal, then lending loan to the government in order to take action, in order to take government programs. So here bank for the government. RBI is considered as a bank for the government activity. So they undertake primary function for the government. So it is considered as a bank to the government. Next one, custodian of cash reserves. So custodian of cash reserve, RBI act as a custodian for the cash reserve for commercial banks. So commercial bank has to maintain some cash reserve with the RBI in order to meet in this uncertain risk, or in order to meet uncertainty, you need to keep some cash as a reserve with the RBI. Here RBI is a custodian for the cash reserve from commercial banks. So next one is custodian of international currency. So when we deal with the other country while exporting and importing goods from other country, we need to deal with their currencies. So for that, in order to pay money, in order to accept money from the other country, RBI act as a custodian. RBI is going to pay money for the other countries on behalf of us. So they are going to pay in their currency. RBI holds, or RBI is a custodian for foreign currency or international currency. So they hold international currency in order to make payments for the other countries. So next one is lender of last resort. Lender of last resort means RBI is the last bank or the final option to get a loan or to get money to meet uncertain risk or in order to meet your expenses. For the commercial bank, RBI is a last resort or last bank or the final option to meet their expenses. So, as an individual or the customer, we visit bank in order to get loan, in order to meet our expenses. So here, if the bank requires loan, if the bank has to meet their expenses, then he go for the RBI. So in emergency situation, RBI act as a bank or last resort for the commercial banks. So all the commercial banks can get a loan from RBI in order to meet their expenses. So that is lender of last resort. Next point, clearing house for transfer and settlement. Clearing house for transfer and settlement. Bank accepts letter of credit, bill of exchange and checks in order to clear. So they discount the bill and give money for the customer. So if the customer requires money immediately, they visit bank and they surrender their bill of exchange to the bank and they discount the bill and they get money immediately. If the bank requires money immediately, in order to get money immediately, this bank will go for the RBI. RBI act as a clearing house for transfer and settlement. They accept check, bills of exchange and all the instruments in order to clear and in order to give money for the commercial banks. Commercial banks will get money immediately by surrendering or by clearing house of transfer and settlement. Here RBI accept all the instruments, bill of exchange and checks in order to give money for the commercial banks. So that is clearing house for transfer and settlement. Next one is controller of credit. So bank RBI is a controller of credit. So based on CRR, SLR, interest rate, repo rate, reverse repo rate, RBI controls the credit in Indian economy. In order to maintain monetary stability, in order to maintain price stability, they control the credit system in Indian economy. They are the controller of credit. Last one, protecting depositor interest. So RBI, last function of RBI is to protect the interest of depositor. So you need to look after the functions or the conditions of commercial banks. So their working condition and their ability to repay the money on demand. So you need to look after the commercial banks in order to protect the interest of depositor. So these are the main functions of RBI. So this is all about today's session. In the coming up session, let us discuss with some more topic about Reserve Bank of India. Until then, keep watching. Thank you.